Hey guys, just going to do a quick few trade recaps that I've taken this week. I haven't taken too many trades this week, but these are kind of three of the ones that I just wanted to highlight. I think I closed out with maybe 5 or 6 trades this week, and so we'll get into it quick. I have 3 of them here. The first one is the USDJPY. I just entered and exited this this morning, right around London Open. I saw it kind of materializing. So, okay. So first things first. We're on a. Let me switch out 4-hour chart. Kind of this slow and steady downtrend. Have yet to retest these bottoms, but that's to see if that'll happen. More recently, we had a little bull run up to around 115 and a nice rejection. Bears kind of took back over and have since kind of broken down a little bit more. And yesterday had a breakout, but no real retest of the breakout point, which is something that I generally like to wait for. I don't use stop limit orders, like buy stop or sell stop orders. I like to wait for that retest. It just gets me in at a little bit better price and reduces my risk. And that's exactly what I did on this one here. And so we broke out yesterday, had this corrective structure over the past 24 hours or so, and broke out again this morning, right kind of as London was opening. And you can see, that hourly close below this little trend line here. That's kind of what I was waiting for, and I actually entered on a 15-minute chart. Couple of attempts here, and then we finally get that push down and breakout, and this was my entry right here on that retest of that trend line. My stop initially was literally just above that breakout point by a few pips. So it was a 10 pip stop, and you can see where I took profit here. So yeah, some people like to kind of duplicate the flagpole there, or the length of the flagpole, and project that down. There's really no specific or set rule on where to take profit. I'm a little bit more on the conservative side, and I just kind of ballpark. I wait for the flag, or for the impulse leg bottom, and then that corrective structure, and then what I'll generally do is I'll take that top point there and kind of shoot for around there. You can see I took profit a little bit above that, which is something that I typically do as well. People who, I don't know, like, just from my experience with these breakout points, I don't trade these a whole lot, because sometimes you don't get that perfect retest, and sometimes they just keep trucking once they break out. But I've found that sometimes price will kind of stop and retrace right before the completion point, because that's where everybody's looking to take profit. Eventually, more than likely, it'll go down and finish that, just because it's a downtrend. But why risk it retracing all the way back up for literally 11 pips, 12 pips. I'm going to take my 3-to-1 risk to reward and just close out the week with that, which is just what this was. So I risked 1 to make 3. So it's no different than someone trading with a 100 pip stop and shooting for 300 pips. I made the same amount of money that they did, because it's all about position sizing. High quality trade setups, they come every day, and you don't need giant stops to capitalize on those. So let's see here. The next one is we'll do USCAD. I've been in this trade for a couple days now, maybe like 36 hours or so. I don't remember exactly when I entered it, but we'll bump out to a 4-hour chart here. You can see strong bearish moves down and kind of maybe entering this little consolidation phase. We established a supply zone here the beginning of February, like 2 weeks ago, and had a nice surge down away from that area, and then we had since came back up and retested that. And you know, you can kind of view this as a potential, you know, impulse move and then corrective phase. You know, so this is just a giant flagpole or bear flag on the 4-hour chart. But you know, you never know until it really kind of establishes itself. But so there were a couple of things. I've got all of my markup here just for the sake of time, but you know, we have, you know, that downtrend. We have the supply zone here. Fib wise, I fibbed from this high point down to the low point here. So this point to this point. And this supply zone fell right in between the 61.8 and the 50% retracement of this impulse leg. So those are two of my favorite, you know, retracements to look for entering the market. I look for other little things as well, reasons for entry. And what else did we have here? So more recently, down on the 1-hour chart, as we were kind of making our way back up, you know, we had you know, a move and then a retracement, making higher lows and higher highs. So kind of an uptrend on the 1-hour chart into this supply zone. And the last leg before this last impulse leg, we had a nice little 50% retracement from, you know, this point to this point. So I was projecting, you know, some profit targets that people were potentially going to be using up around this supply zone. And you can see kind of right in between those larger fib retracements were those negative 61.8, negative 23.6 profit targets that people use. So I was kind of anticipating, you know, one of those to be hit. I missed the initial spike up into here. Actually, you know, I think I was monitoring it. There was some heavy news right as price was kind of spiking up into this. This was 8 a.m. on Wednesday, I believe, which is kind of right around some heavy news times. So I wanted to see how price was going to react. And this is an hour chart. So you can see we have, you know, that nice spike up into the supply zone and then a nice little rejection out of it. And then it kind of just started to, you know, test it with each little pop up. So I was looking for, you know, a little area to enter, you know. So I kind of projected this little, you know, this little minor trend line up based off of these 2 wick points, and that kind of gave me a little, once we started closing below this consistently on the hourly chart, then I went ahead and entered on kind of a retest of that, which was right around the bottom of the supply zone. Anyway, I believe it was potentially on this green candle or maybe this little wick up here. I don't remember exactly which one it was. So yeah, I didn't have a very large stop on this, just kind of my usual 30 pips. It was just above the supply zone and the negative 61.8 profit target, and it was just pretty much, you know, a painless trade all the way down. Took a little bit of retracement, sat through a little bit of the retracements here. And one thing that I was looking at, I was really watching to see how price was going to react at, was kind of this blue well, ideally I wanted to take it down to this blue trend line, which it may still go down, but it really is kind of getting hung up here. So I kind of projected this smaller time frame trend line here from this point to this point, and you can see you know, price kind of respected it the first bounce, and then it kind of trickled. It's getting hung up on the EMAs, finding resistance on those, and then we had a second bounce this morning, and the 4-hour is due for some type of retracement potentially. So I just went ahead and took profit before the weekend. This was a, you know, 3-to-1 risk to reward trade as well. I generally like to get, you know, at least 2-to-1. So that was that trade. This was about a 94 pip trade, 95 pips, somewhere right around there. The last trade was a pound yen trade. I really like pound yen. Once it moves, for or against you, so you have to really have, you know, good setups, and you know, try and get the best entries on this guy, because it can really truck for or against you pretty quickly. We are in a massive daily wedge here, or kind of pennant, or whatever you want to call it, potential flag pattern on the daily chart. You know, we have this large impulse move up starting around election time of last year, for just hundreds and hundreds and hundreds of pips, and then we have kind of started doing this little correction phase. More recently, the 4-hour has its own little wedge going on, and you know, if you drop down to the 1-hour chart, you kind of see some of my reasons for entry. Again, we are in that little wedge forming, and fib wise, we have the 78.6 fib retracement with some nice little structure levels here that I had marked off. It's funny, but I originally had a limit order at 141.76, and that would have gotten filled. The high was 141.77.5, so that would have gotten filled, and I would have taken no drawdown. But that was, you know, about 10 pips or so above this this wedge, and I had a lot of confluence right around where my entry was, so that was why I entered. And initially it was a pretty perfect entry. You know, I entered on kind of the first test of these little entries on this candle, and it dropped for, you know, I think 24 pips or so initially. Came back on me, took a little bit of drawdown before finding its true top and kind of rolling over from there. Profit target wise, you know, I was just essentially targeting the bottom of this, you know, this wedge formation we're in. I was potentially anticipating a breakout to the downside, but you know, you can't really trade that until it happens. And I saw some buyers stepping in. You know, we have this little impulse move here, this little area here that I was watching. You know, obviously a lot of buyers stepped in there and drove it to the top of the wedge there. Had a couple of nice little structure levels here that lined up kind of close around the bottom of that wedge. So that's where I took profit. I believe it was on this candle here. I saw this large wick come up and close back up above it. So I wasn't going to chance this sucker coming all the way back up, which it may. You can see it's put in a large, what they call, I don't know, a pin bar or whatever. I don't trade those candlestick patterns, but they put in that large candle there, so you know, that it could potentially go back up. Who knows? So all in all, I think this, let me do a little bit of math here. Had a pretty decent week, and and 70.3. So this was just shy of 200 pips over these three trades. Let me know if you have any questions about any of them.